Well, good morning, everybody. It's Jerry Hart here, and a warm welcome to the September edition of the 2020 monthly Practical Tax Update webinar. It's clear from talks I've had with one or two people over the last month or two that not everybody is aware of the changes that have arisen, both for this year, next year, and indeed the year after. And I'm not surprised. It's because they do sneak these things in. It's nearly all based on CO2 emissions because, of course, the government is committed to trying to get manufacturers to keep on reducing CO2 emissions. And they do this by offering incentives, both in terms of road fund tax, actual costs of running the car, and also, of course, in the company car tax charge. Let's move on, and I'm on page 4 of the notes, and look at a very important topic and a very important development. This is the very useful corporation tax exemption, which was introduced a few years ago on gains made by a company on the disposal of what they call a substantial shareholding. Brief background to this is that the original plan to get this for this exemption was put forward by large companies, although as we'll see, smaller companies can benefit substantially from this. And what they said was, look, we invest in shares in quoted companies, not as our main part of our trade, but we do that when we have surplus cash. And you, the government, should do what other countries have done for a long time, which is introduce a form of rollover relief. Let's move on to an unrelated topic, junior ISAs, which we knew were coming in, and I think most of us would probably have felt that if they're coming in, they're going to come in at a pretty low figure, probably £1,000. So it's quite a surprise to learn they're coming in at £3,600. Of course, there might be a lot of clients who think, I don't want to go onto the stock market because of the volatility. On the other hand, junior ISAs, by definition, are going to be long-term, assuming the child is well below the 18th birthday, and therefore you've got a long period to look at. Let's briefly have a look at what's happening at the Office of Tax Simplification. As I probably said to you before, you may feel, well, we'll believe it when we see it. But it is worthwhile looking at what they're doing because they are now adopting a policy of going out to people, advisors and taxpayers and other interested parties saying, what do you think under these particular topics? So it really is beholds us to actually take the time and trouble to actually get involved in this. They're going to have workshops around the country which you can join in as well, and they would like professional advisors to actually help them arrange the workshop. So that could be a useful marketing aspect for your firm if you've got the time and the inclination. Now, gifts of pre-eminent objects. This was mentioned in the budget, and the idea is this will come in from 6th of April next year. Now, you may say, well, I can't think I've got many clients, if any, with pre-eminent objects, but you never know, do you? And like so many ideas that governments have, they've decided to provide the incentive for people to give some pre-eminent objects to the nation. They'll give them a tax break. So, of course, they've chosen the tax system as the means of trying to get people to decide to do this. And the final topic I want to look at today is a very important one where I'm saying it's time to review all the penalty cases you've had in recent years. Now, the problems with penalty cases are many. One of which, I'm sure you will agree, is that basically penalties, I'm not talking about penalties for under-declaring income in a major way, when the penalties can be up to 100% of the tax, not that sort of penalty. The fixed penalty for filing late, for example, is not that much, although, of course, there are times if the unfiling, if you like, or if the late filing, I should say, goes on beyond a certain period, the penalties do get quite substantial, don't they? But often the penalty is £100. And I'm sure you've had cases where you thought, well, I'm not sure whether the revenue entitled to this. I think the client might have a reasonable excuse. It's going to take a long time. Let's forget it and just pay the penalty.